Good morning, everybody. Good afternoon. This is Andrea Formato, the corporate trainer here at HomeXpress Mortgage Corp. Thank you so much for joining us today for our continuation in our broker webinar series, How to Experience the Life of the Loan here at HomeXpress. We will go ahead and get started. Once again, I will go ahead and read our disclaimer. The content of this presentation is proprietary and confidential information of HomeXpress Mortgage Corp. It is not intended to be distributed to third parties not participating in this webinar without the written consent of HomeXpress Mortgage Corp. Taking a quick look at our agenda today, again, we'll do a welcome. We'll do a quick look back at our webinar series review. We'll talk a little bit about the life of the loan here at HomeXpress, and then we will end, of course, with our website and contact information. Again, I'd like to welcome our panel. We have David Greider, who's our SVP of Wholesale Lending, of course, myself, and Ray Menina, who's our SVP of Strategic Initiatives.
It's great to be, a non-QM today with the rising rate environment. And thanks for all you guys attending. I know when you looked at the market news this morning with inflation and some of the rising rates in the bond and treasury market, that hey, we've got to watch our locks, right? So I get that. So I'll try to keep this like 15 minutes, but I'll answer any question you have. If it goes longer, great. We'll do that so we can get back to getting your loans closed. That's what it's about. Just kind of give you a view of why we're talking about experience the life of the loan at HomeXpress. It's good to reflect back on some of our webinars we did previously. And we started out our webinar series monthly back in October, and that was called Non-QM Made Easy, Turn a No into a Yes. Really what it came down to, I've been a non-QM for over 6 years when it came back into the marketplace, is looking at the guidelines that were done in 2015, 2016, the spread between a prime rate and non-QM rate, and how that transformed because of some of the companies like HomeXpress and some others that put a footprint out there that these loans perform and they're good loans, right? So therefore the guidelines got easier. It's more accepted. There's lots of buyers for non-QM loans on Wall Street that are done to compliance, and they understand the ATR. And so those guidelines kind of struck down to make it easier for you to close loans, right? Then we went into November webinar series, how to source non-QM loans. Okay, these are a little bit easier. How do we source these, and what's the demand going to look like in non-QM? Well, we kind of went over that, and we saw some of the analysis going forward where the mortgage market in 2022 was going down $1 trillion or so, but non-QM was going to go from 40 billion to north of 80 billion in 2022. And then how do you source these, right? So the CPAs, right? Real estate agents, use your social media. There's so many sources for you guys to go. And one of the number one things to say is look at some of the loans that you had on your desk over the last couple of years where you said, no, I just can't get this deal done. The tax returns don't work for a self-employed borrower. It's an investment product. They own too many properties, doesn't fit. And I have this stack of kind of easier streamlined refinances. But if you went back and looked, you go, man, there's lots of opportunities for you in the non-QM, and you'll see that's actually growing into this year. Then, okay, we wouldn't source them. Hey, I got the self-employed borrower, taxes don't work. I need to focus on other ways to get this qualified. And so non-QM options, we look at those. We got 3-month bank statement, 12-month, 24-month. We got P&L, we got 1099s, we got 1-year tax returns, right? K1s only to get that to work. Now, you don't have to be an expert. The experts are our account executives and our company on this. We've been doing this for 6 years. We know how to structure these loans, get it done. What you need to know is who to contact, right? And that's why I came into our webinar series in January, what to look for in a non-QM lender, right? There's a lot of things you look at, but you want a company that's done it for a while, that knows what they're doing, right? They got the training for their staff, and so are highly trained account executives. They have well capitalized. They have consistency and reliability right? They respond to you. They have a operations team where you could actually call. There's no secret to where your loan's at in the process. You can call somebody to get answers, right? All right, so that gets into this, right? So let's go into the next page and look at experience the life at Home Express. I'm starting out by, going through HomeXpress's broker approval process. And again, that's the first place to start because there's so many things to go with that. So once you're approved with us, then a lot of different things come out that's available to you. We are a true lender. I mean, we do almost everything internally. It's our guidelines, our money we fund with. We handle the due diligence of the file after funds. We do all that stuff into the whole loan sale, right? Well, part of this is a broker approval process. That's all internal. There's no convergence, nothing like that. And it's really quick. It's usually done in 24 to 48 hours. You're available to DocuSign, so you don't need to have all this paper and put in that. You can do it right on our website, which is there. As far as compensation available, we allow up to 2.75% borrower paid or lender paid options. And then I put on here Investor X. These are non-TRID loans where we allow dual compensation up to a maximum of 5%. And kind of put a note on here. We need 50,000 net worth on unaudited financials. That's just your balance sheet and P&L, right? But again, it's unaudited as we go through the process. We get your lender paid comp. And if you're newer out there, new broker, and may not have that, we can look at that as well because we make the decisions. No one else is there. So if you have a unique situation, please let us know. Don't let's stop there. We're flexible. Again, these are our guidelines that we do. So keep that in mind. So now that you did all this, you're approved and you get assigned an expert uh, account executive. Then you're also going to get this package. Welcome to Home Express. Here's some technology that we use called X Connect. This is your broker portal interfaces with our company, our LOS system, and your account executive. So many things you can do here. You can do pricing, you can do scenarios, right? You can go through all these things. You can work with your expert account executive on, hey, I've uploaded the credit report and the registration system and the bank statements. Great. And the account executive will see it. It's live 24/7 instantaneously when you upload those. So you can have a conversation how it qualifies in the program rate. Maybe you're going to get a better rate going on this program. Those type of things. Those are the discussions you have with your expert account executive. I did mention, loading up the bank statements, right? Yeah, right in the registration system on your desk. You can load those up, and we'll pre-underwrite your bank statements for that self-employed borrower using bank statements. Huge, right? So maybe you got a borrower you talk about self-employed needs to go buy a house, right? Well, what income are you going to use? What's the DTI? What's the purchase price? We can get all this done for you, give you estimated, payment based on the income they have, and you can go out there and they can shop for that house and have confidence that that the DTI is going to work. You also use this for our loan submission. So as you go through, you can price, you can do the scenario, save it, go back to it. And then all of a sudden I got the minimum submission requirements, which isn't that many, right? And then it gets submitted and it's instantaneous, right? That it goes right into our setup department. So we believe technology is going to be here, and that's the way we can help deliver speedies and convenience and get that deal funded quickly for you. So let's go on the next page. Another thing we're transparent, right? So you can see your whole pipeline, you can see your individual loan, the conditions on it, all that stuff, right there. You can go put conditions, you can upload your conditions 24/7, and they go right into the underwriter's queue to review. But other thing we're forward facing, you ever know how fast are you? I mean, what kind of speed do you guys have? Well, we post this daily. I took this one from 2 days ago, but it's fairly typical depending on the amount of subs you get, during the week, right? Income desk. That's really, we put down 24 hours. It's really within 10 to 12 hours, uh, mainly same day. So when you upload the bank statements, might have a little questionnaire to tell us a little about business, boom, comes back usually the same day, and you get what the income we can use on that. Loan setup. And again, this is usually 24 to 48 hours. And what do we mean by loan setup? That goes in our system with using a portal puts the conditions all in the same order so the setup person can get disclosures out fast, right? And so that's way. And we have some information regarding that if needed. What does the borrower get? We use Doc Magic, and it goes out for the loan estimate and notice intent to proceed, right? So you all know you need to have that done before you can order appraisal or borrow incur costs on the loan. So, and then we let you know. There's email notification out here too, to you and to the account executive as you go through this. So it's not like, wait, no, you get notification. Thank you for submitting your loan. Great, we got it. Uh, Disclosure's been sent out. Then you get an email. Notice intent to proceed was signed. So you're going to get all that, so you have that information. Underwrite, initial underwrites. Right now we're at 72 hours, and that's typical. It's either 48 to 72 hours. So I kind of chose one where we're a little bit longer on this one, right? And that's from setup. Boom, they click it over, goes right into the underwriting queue, and it gets assigned to an underwriter. And the email notification goes to you, hey, you've been assigned to an underwriter. Great, we're progressing down this life of the loan, right? And then comes out at 72 hours, here's your conditional approval. And this is where I always kind of recommend you get with your account executive to look at the 2 or 3 conditions that really kind of are kind of more critical, whether it's a credit history or mortgage history payments that we might need. There could be a lot of different things as you look at, because again, these are minimum submission items. We're going to condition for what you need, and the AE probably is going to tell you up front, even before the underwriter gives you a conditional approval, what the conditions look like. Loan conditions, once you put them in the portal and you upload them in there, it's about 48 hours. So, except for when you're almost CTC, we try to jump on those earlier to get that into the doc queue, right? You see our COCs, unfortunately, that's the world we live in with TRID. We got to keep redisclose. Appraisal came in higher, lower. They want a different rate. They want to buy it down. So that's the COC process, usually completed in the same day. Loan disclosure CD, same thing. When we get out there, it's about 24 hours of CD. Docs funding, man, we're fast. So anything I say is that we really have a great doc and funding team. And I can go through it. It's on the next slide, and then you see our broker support. You're going to get approved in 24, 48 hours. Let's go to the next slide, Andrea. Okay, and I got to put this on here because it's a star. I mean, once it hits our doc queue, it usually gets done within 24 hours, right? It is. And then you're going to go sign it. Scan your docs back, right? We know it. We need to have them back for about 24 hours for review, but we'll fund on scanned docs. Not a lot of companies do that, and we're one that do. We believe that should be a great experience. They went through the whole process, right? And I look at it. You got a borrower that you've been having conversation with, whatever need base that they had. Then you're calling around to maybe couple of different lenders. Hey, I'm going to go to HomeXpress. Why? They're reliable. They got the right program and the rate that's acceptable, right? Then you go through all this gathering conditions. When they sign those, you want that to fund right away, right? You have a good experience, and that's what you'll have here, right? A real good experience where the borrower signs. Unless it's a rescission, it goes right into funding the next day, right? And so this is just an example we have on here. Not all are like this. Some are even faster, but this is an example of what you can see in the portal, right? Application received January 20th. And you just go through all the steps that gives you kind of the dates assigned, funded February 4th, right? This is typical. We can go as fast as you and the borrower want to go. Typically, the only thing kind of holds us up would be the appraisal time, trying to get that appraisal back within a reasonable time, right? So if the appraisal is not ordered until the disclosures go out, the borrower signs intent to proceed, then maybe it takes 2 weeks. Certain areas I've seen take 3 or 4 weeks, right? So that's just the appraisal. But all the other stuff we have for you in here, and you can get done right away, right? And given a rising rate environment, you want to make sure you're closing within that lock period of 30 days, right? You don't want to have to go back to the borrower and say, hey, you're going to eighth higher rate or a quarter higher rate in a rising rate environment. So this is important to do. Is on this list is get us in early, right? Let's go to the next slide, Andrea. Okay, life alone. This is a kind of a high overview of everything to do. We can get more detail individually, but our goal is to make it easy to submit and close your loan. Everything we do is around that. We don't sell pizzas or anything like that. We do one thing, and that's close loans, right? And that's important as a lender to be. It's like, hey, this is who we are. This is how we do it, and we're transparent. And you can any step of that way, you need to get information. That information is going to be available to you. If not from the portal, you can call one of us. We have non-producing sales managers, so you can get quick responses, right? We have highly trained account executives, right? They do a full 2 weeks of training. Not only that, most of them have really good mortgage background or wholesale background. Then we still train for 2 weeks, and we go on at least a day each week of further training, right? Talked about transparency on loan status, right? Safe and effective portal, right? Do you really want to email a whole bunch of non-public information out there, or do you want to do it in a safe, secure portal, right? All this means is you're going to close your loans faster with us, and you're going to close more loans and get more repeat business and referrals from making it the loan process seem easy. All right, with that, we'll go to the next slide and take some questions. Andrea, I'm sure we have a few out there.
We do, David. Thank you. The first question is referring to the turn times slide that we did.
Yeah.
For the 72 hours and 24 hours, are those business or calendar days?
Great question. Yeah, they are business days. We do let our underwriters have a weekend or two off during the month. But yeah, that's business days, right? So if you sub a file to us and we go through all this process on Friday, Saturday, and Sunday, or a holiday, that we're not working. So those are work days.
Okay, great. Thank you. So a couple more questions. Can you close a DSCR in an LLC?
Absolutely, right? So we can close an illegal entity, right? So we do, I'd probably say 50% are done that way. And when you got to investors, and they're small, medium investors, everybody knows the advantages, at least they will understand the advantage of closing, investing in an LLC, right? Kind of secures them personally in case there's a lawsuit or anything, it's right on that business and not them personally, even though we do have a personal guarantee because we don't make loans to a business. We do business purpose loans. You can invest in a LLC, but we do have a personal guarantee on that.
Great, thank you. Next question. Can you explain dual compensation a little bit more?
Absolutely, great. And this comes up quite a bit. On some of these business purpose loans, if you're signed up with us for LPC, right? That LPC, whatever it is for all products, is going to be your compensation. So let's say you chose 2% lender pay compensation. So you could go on a business purpose loan, price it out for lender paid compensation of 2, and charge 3% borrower paid, right? That'll equal the 5%, or maybe a combination. Maybe you do lender paid of 2 and 1 borrower paid. That is acceptable on a business purpose loans, non-TRID.
Great, thank you. We have a question. What is the credit score minimum?
Right now, it's 600 is the minimum score for all our products. Now, Primex requires a 640, but our consumer loans, 600 gets you in. Our business purpose loans, 600 gets you in.
Great, thank you. Next question. Is there a difference in rates or cost if they are using 3-month versus 12-month versus 24-month bank statements? And why would you want to use three versus the others?
Good question, right? This
Mhm,
is all on
mhm.
structuring the loan, right? So there is different levels of rates or rate add-ons, you say, for different documentation. Generally, you have more income documentation. Investors think it's a maybe safer loan. We got more information, a little bit lower rate. As soon as you go to more limited documentation, doesn't mean it's not a good loan. It just means, hey, there's a little bit, maybe a little more risk associated with that. So it might have a little rate add. So why would someone do a 3-month bank statement program, or a 12-month or 24-month? And I'm going to say most of our loans are done on 12 months because it gets good snapshot. It's done. But the 3-month is there because of accounting methods, right? We've been doing this a long time, over 6 years, and we've looked at some of these businesses, and you look at, man, they have a great credit score. They saved up a lot of money of assets, but they deposit their business receipts in several places, right? Or maybe they had an account here, and then they transferred to another account, reopened one, where it gets really convoluted. So then we come up with a 3-month bank statement program, and 3 months going to have more. I think we go to program, we'll have a different rate add for that. And if that's an individual question, you have that, and that's part of our account executives training, is to kind of structure that loan for you. Say, hey, this will work. This is what we'll need to get it done, right? Based on what the borrower's circumstances. non-QM is unique. It's like they're loan stories. The more information you can provide our account executives to put that deal together, it's going to go for way more smoothly during the underwriting process. And that's why our account executives, not only they, okay, they're a sales job, they're really that's part of their consultants and their field underwriters. We train them in all our guidelines, and they've seen these scenarios and go for that. So they're kind of the field underwriters, knowing what programs we have, what can meet your borrower's needs.
That's great, David. Thank you. Here is a question based on the state of the industry right now, based on the current expectation of the Fed move in the near future. Do you expect another rate change before the actual move? So basically, we haven't had any increases in months, and then we've had three kind of recently come up. I know you kind of addressed that
Yeah.
at the beginning, but any
I'm going to tell you,
further?
I saw this flyer from another non-QM lender, and it cracked me up. But I looked at it, it's big UP with the arrow going up, and it says rates are moving up. Sub your loan in now. It kind of cracked me up. But yeah, no, I'm expecting this year, especially with the news of inflation, the Fed rate hikes, we're going to have several increases this year. The good news I'm going to tell you is that in non-QM, it's more of a need base versus a rate and term type of transaction that you'd see in the agency world, right? It's more of, hey, I wasn't able to get financing because if they could have, they probably did that with the rates are so low on their refinances, right? That were done for the past couple of years. Need-based meaning they're always their need for cash out, right? Self-employed borrowers who didn't qualify still need to buy homes, right? So it kind of fits our wheelhouse, right? Of what need-based, right? Yeah, rates can go up. I mean, the 3% rates in non-QM are gone. The low fours are probably way out. I think it's going to settle into more normalcy, probably in the 5 range for that. I think agency being 4. And so one of my webinars kind of went through what was the spreads, right? A typical spread between the prime rate and this just overall, not individual file, it's about 150 basis points. So if you see prime rates, right around 4, maybe high 3s, at 150 that, and now we got some loans that would be 100 basis more, some might be 200 based on the risk, but overall it's about 150 basis points. And then I'm just saying that I'm getting the call, man, get on your loans early, get the conditions in, close them within 30 days so you don't have to have that call with the borrower and saying, hey, man, we lost our lock, we're going up an eighth, we're going up a quarter. Those are really uncomfortable, but be prepared. And I'd be talking to the borrowers that way as well and say, get your conditions in. If the lender needs something, let's get on it right away so we can close within that lock period.
Great. Thanks, David. Is there a limit to the amount of properties or dollar amount that you will do for an investor?
Great. Now, as far as the borrower owning properties, they can own unlimited properties. We don't have that as an overlay. Right now, for an individual, or even if they're vested in LLC because it's a personal guarantee, we'll lend at one time, do 10 loans up to 4 million in aggregate. So yeah, 10 loans from one borrower on the investment product.
Great. Thank you. I'm just scrolling through to see what else we have here. Can you use the actual rents on DSCR versus the estimated rents from the appraisal?
Another great question. Yes, on a refinance, right, we can use actual rents to calculate the DSCR. So it could be either one, right? So we'll take the higher of actual rents or the rent survey, the 1007 or 216 if it's units. So that is available in refinance. The reason it's not available on a purchase is because it's not rented out yet, right? Don't know. So you have to use the market surveys. And keep in mind when you're doing all these, if you're getting into those, sometimes these appraisers don't have access to all the data. A lot of, I guess, landlords or whatever, they list their properties on different sources than MLS, right? Than MLS listing. And so that's typically appraiser goes there. So when you're ordering appraisal on investment program, I would give that information you have for that area. Hey, these properties are here to kind of cover that in case it comes in low, right? And don't upload the 1007, right, or rent survey unless you really kind of reviewed it because again, these loans on these business purpose investor X, There's based off the cash flow of the property and the credit profile of the borrower. There's no income docs on this. You can elect to do that, but generally they're not because there's no real price difference. So get that ahead of the game. You're going to be miles ahead and it'll be a smooth closing for you.
Awesome. And then lastly, David, can you do acreage and rural properties?
Yes, we can do acreage and rural properties. Now, the rural properties is on a consumer basis, limited LTV, my little rate. We It's tough to do remote properties, right? So rural in nature, yeah, we can do those. It's not really available on our investment product, but they are on a consumer basis. And the acreage kind of subjective. Remember, we underwrite our own guidelines, right? And we can make changes to it or make exceptions to it. And I've done several of those when you look at estate homes that might have 12 acres, but it's really just an estate home where they got excess land. Those are perfectly fine with us, right? And then if you get some of the rural ones, we're fine with that too. We have to, limit that loan to value, but that's it, right? So bring all those answers in. So if you're looking at a loan that you don't know can be placed, you need to call. You need to call one of our expert AEs, and they'll be able to structure that, kind of figure out how to put that deal together with you and what the borrower can provide, and we'll get that deal in, and you'll close it. Our funding ratio is north of 70%, and that's been going on for like 6 months plus. I've tracked it. So you sub in a loan here, most likely it's going to close, right? That's what it says.
Awesome. Thank you. That is perfect setup to our next slide.
Awesome. All right. So here's our website. You can look at it here. Become an approved broker. You can submit a scenario right on this, and one that'll be referred to one of our account executives to give you a call, right? And discuss that scenario. So please check us out. Go to our website. We're forward facing. We put our rate sheets on there, how to contact us. And we want to have that transparency and to bring you that level of confidence that you comes to us, you know what to expect, and we're reliable, and we'll answer any questions you have. And that's huge as you're dealing with non-QM loans or maybe something you haven't done a lot of. And again, here's my contact information, right? And raise, right? You can email me directly, you can call me, and I'll return every call and every email that I receive. So I wanted to thank you guys for attending this. And it's been about 30 minutes now, some great questions. And man, we look forward to doing business with you, and we want to be your partner.